Technicals, Parag Thakkar on the fundamentals in our studios. Gentlemen, thanks so much for taking the time out. Parag bhai, you've been constructive for a while and with reason, but this is slightly out of syllabus, if you will.
Yeah,
not too many people anticipated.
Sure.
The pain is sharp. Does it bake in the negatives, or is it uncertain for now and better to sit on the sidelines?
No, basically, see, all said and done, as I keep saying, that one should not go by what we recommend on the stock-specific basis, because markets are going to remain choppy and volatile, and every day is a new learning, every day there is a new event. Luckily, market gave very good opportunity on, I would say, Thursday, when markets were steady and not falling much, and Friday opening was also only 60 points down for the Nifty, where we raised a lot of cash. Luckily, we raised around 13.5 to 15% cash in the portfolios, and that will put to work slowly and gradually after today's fall.
So, okay.
So
are you saying that you will start deploying?
Yeah, a little bit, gradually.
At about
and that's what I always do, because in a falling market like this, and where this will end, actually nobody will know, right? But I would agree with Mr. Ramesh Damani's statement that over next 2 weeks or 3 weeks maximum, something will happen. And Trump will claim victory, and things will start to reverse. So things cannot continue to fall all the time. So we have to deploy very gradually, slowly, in the pockets which you feel are least impacted, or whether or in the pockets like IT, for example, where the impact is already pricing in. For example, if today also it falls by 3-4%. Then I would say that even the bad numbers which are going to come for the March quarter gets little bit priced in. And then if suddenly something improves globally, then you can see a very sharp bounce back.
So before we get to Kush, sorry, last question here. What within IT? Because we're talking to Rahul Jain as well, and he's given some thought. What are the stocks on your radar? I'm not saying buy, sell recommendation.
Correct.
Or what are the businesses on your radar?
So TCS, Coforge, Persistent. These are TCS within large cap, mega cap, I would say. And because see, TCS in every cycle, such down cycle of IT, TCS, because of its cost takeout deals and transformation deals, and I'm not saying here that this quarter will be good. I'm not raising any hopes for anyone. I'm just saying that, it's over the medium to long term, if you see, when US corporates want to save money, want to conserve money, TCS comes out as the best play. And now valuations have corrected significantly. I'm not here recommending to buy, because we as a fund manager, we are very price sensitive, and we also keep learning, like retail and HNI does. We also keep learning, right? So that is why, I would say that very calibrated approach, very slow in deploying capital. But if market gives opportunity and keeps falling, we would definitely. This is now from today onwards, I am not in a mood to sell. That summarizes.
Okay, that's an interesting point that you're making. Kush, is there any point talking about levels this morning? Because whatever you say, we're expecting what, 3.5%? Is that chalava, or is it evident to you today?
No, as I said, the chalava is in terms of the magnitude. The direction usually is there, correct? But let me start with a small parable that we've all heard, growing up. आप जंगल में जा रहे हो, सामने शेर आ गया, आप क्या करोगे?
पेड़ चढ़ेंगे?
नहीं, जो करेगा तो शेर करेगा ना, आप क्या करोगे? तो this is what is going to happen with the markets right now. 800 points down, 900 points down. What are you going to do about it? The best thing is to come out of both the situations, the jungle and the markets right now, unscathed. So the idea is to just stay put. Don't react, because most likely this is going to be an emotional reaction or a panic driven reaction. So the best thing is to perhaps sit this one out right now. Don't sell, don't even jump to buy, because as Parag bhai also said, we don't know where this is going to end exactly, even in terms of levels, right? But yes, just to put in some data points now. On Friday, if you recall, we did discuss that there was some pressure which was evident with the 5-6 sessions of lower highs and FII short build up on the index futures piling up. So this was evident. I'm not saying that the magnitude of the gap down that we're looking at was on the cards, but some pressure was evident, and we saw that on Friday as well. Now, what happens with this kind of a slam dunk of a gap down is that you're just ripping the band-aid off. It's not a slow burn, it's not a slow pain. It's the entire band-aid being ripped off at one go. So if you look at the Asian markets or most of the global markets, how they ended on Friday, the minimum that I saw was about 5% down. Nifty right now is suggesting about 3.5% of a gap down. If we're able to hold above the opening of a level today, from whatever the gap down is suggesting, or even just to make it easier, hold above the 22,000 mark, by the end of the day, I take that as a win for today. Also, just to throw in some more data points, PCR for Nifty is already at 0.4. Typically, 0.665 is where oversold territories are hit, and then you see some sort of a rebound. Not saying any reversals, but yeah, some sort of a temporary rebound could well come about. And the FII short position is now gone from 70% on Friday to about 71%. I'm hoping that, they might perhaps come in to cover some, but, that remains to be seen. Positive on financials, Bank Nifty has been on a good footing, and with whatever's happening, maybe Parag Bhai can comment on that, but the RBI rate cut hopes have gone up, who knows, 25%, maybe even 50%, but if that were to happen, then financials are at play, and we've discussed some of these stocks in the past, HDFC Life, PNB Housing Finance, and if you want to play safe, why not the likes of HDFC Bank and ICICI Bank? These are the pockets which you want to look at if you want to buy in a dip like this.
Right. That's an interesting take, Kush. On a day like this, any picks from a buy perspective, or all are going to be sell calls?
The show must go on, correct? So I do have picks, and it's a mix of a buy and sell, and in line with what I've been speaking, which is if you want to buy, look at financials for now. Power is the other space, infrastructure, cements are the other sectors that you have to look at if you want to buy. Today I've chosen financials, Max Financial. On a good footing, volumes have been fairly decent. Even on Friday when the market was down, this stock actually rose up on the back of good volumes. So for targets of 12.10 and 12.60 with a stop loss around the 11.10 mark. On the short side, I've got Tata Elxsi. It did see some sort of a rebound, but that's being sold into, and the volumes on the way down were higher. So 49.50, 48.80 are your targets. 5,065 is where you place that stop loss. But as you'd already know, but good to put it out, don't execute these trades right at open. Give the markets 15, 20 minutes, maybe even half an hour to settle down, and then perhaps go out and execute some of these. Or maybe we could look at some of these trades once the markets open. So yeah, not at opening, but yeah, these are some of the trades that you want to keep on your radar.
By the way, just before we move on, I think there are, I don't know if we have the data with us right now or no, but there is a set of views that have come in from various brokerages, and Goldman Sachs, Lawrence Blanco, etc. have all given. So Goldman Sachs India strategy note today says that they see a 2 to 3% impact on earnings growth in India over the next couple of years owing to tariffs. They have lowered their already below consensus earnings growth forecast for 2025 and 26 by 2%. 2%. And they expect 11 to 14% EPS growth in 2025 and 26. We'll get some of these going for you shortly. So keep that in mind as well. Okay, 925 points on open. Kush Bora, very quickly, I heard you mention that that's a victory for today. But if we close, let's say 22,000 and no signs of a bounce back, would there be a short trade on close, or is this the near-term bottom formation happening?
No, I'm afraid things will actually get a little more rough before they get better if we close below 22,000. And I'll tell you,
I'm saying above 22.
Above 22,000, then you play for a recovery, because the
you play for a recovery.
Okay. And just to add to that,
but of course, I'll give you the leeway of making this comment again in the closing show, because things could change between now and afternoon.
Oh, absolutely. I mean, we go by the day kind of a situation, at least on a big day like this. But just to cover one point, I recall Alex's discussion where he said, some of my peers also said that the rally that we are seeing in March, especially the second half of it, was a suckers rally, correct? We did assign a probability to it. Right now, that seems to be coming true. If you look at the grand scheme of things, see what's happened is we've been down for 5 months, and March was a one-off trade. So if I'm looking at just that data point and as candles, we've had one positive close after 5 negative close. So don't read too much into it that the recovery is underway and stable, right? So if you go by that, 21,500 was the base case scenario for the fall that started in September anyway. Very much comes into play, right? And if we hit 22,000 on opening, or maybe slip just below that, that's pretty much achieved. Those levels and lower come into play right now. And with the uncertainty, if there is one more bad day from the global front, you're just there. That is when medium to long-term buying actually becomes very, very, very attractive, at least from a technical standpoint.
Right. One question I have for you, Kush, is specifically if you have to talk about the retail investors and HNIs, clearly they have unwinded their positions to a large extent in terms of leverages in March itself, right? And this was done at every rise that we saw. the DIs actually have pressed the sell button, if you see from a F&O perspective, at much lower levels. Has this ever happened earlier, number one? And does this come in as a surprise where, to some extent, the retail investors are insulated because of them going and probably clearly calling out their calls and leverages early then in March versus the DIIs, which have pressed the sell button after the event?
So one, I don't have the data whether how many times it's happened in the past or whether it has or not. But let's be honest, a lot of those retail investors who've had to perhaps get out of their leveraged positions wasn't a conscious call. It was a forced one after 5 months of fall. A lot of clients that we also speak to have had the same dilemma, that how long can I hold on, no matter how much M2M money I park, correct? I can't park for 5 months and 10-15 points on the index, right? 10-15% on the index, much higher on the stocks. So my idea is that what happened in March was perhaps a short covering trade from the FII side. DIIs were perhaps considering going short because you need a counterparty to it. It's more of that. And retails, mind you, I don't think were taking a conscious call of getting out of leveraged positions. It was more of a forced hand.
Okay.
Situationally, they've been in the good hands right now.
Yeah, okay. So I want to get into a few stock-specific updates that have come through, and maybe your opinion on this can clear something of a confusion or maybe a difference of opinion. Trent is what I'm talking about. 28% revenue growth in the fourth quarter is what they reported. Brokerage is penciling 35% plus. And so that is very clearly a negative. But would you say that the addition of Zudio stores to the extent of 132 in the fourth quarter, and if you look at the whole year, they've added about 244, so more than half added in the fourth quarter, that is likely to play in the first half. Is that a positive enough to counterweight the negative?
See, it's a great company. By all means, at one point, it was a very large portion of my portfolio. But then it rallied very hard. And so we got out. And so I would refrain from giving a particular recommendation because it is not a portfolio stock.
Yeah.
And absolutely a great company. But the only thing is that valuations and today's market picture, that suggests me that the stock can fall. Okay. I'm not saying that you should short the stock or something like that. It's a great company run by great people.
But as somebody who has tracked it in the past, I'm not asking you to give a recommendation on this. If you look at these two pieces of information separately, would you say that the slower than expected growth in revenue is a worse situation than the addition that they've had in stores?
See, overall, we are seeing a little bit of slowdown, right? And that will get reflected in every company, however good you may be, right? But so here, just to, when you are talking about stocks, I would say that domestic focused sectors like cement or FMCG, which are domestic focused, or pharma, which are domestic focused, those, if they correct meaningfully today, that would be the space to deploy money in.
By the way, guys, just pull up Trent. Did I see a 15% downtick on it? Individual stocks, a lot could happen. 15% for Trent. That's a really sharp one. I don't think Trent has seen a 15% downtick in a really, really long time. We'll get those data points outgoing. Tata Steel is down 10%, if I'm not wrong. A clutch of other, I want to see what Persistent is up to, was down 10% on open. I think recovered a little bit. Is it still down? Okay, no, 5.5. So some of the IT stocks, I wonder if Infi, TCS, etc., because that's a bucket that had fallen quite a bit already. It's kind of showing some bounce from the lows, but that might only be from the lows, if you will, still down about 4.5, 5%. So looking slightly wobbly. Look at that list. Thank you for pulling that up. Coforge, Infi, HCL, everything gone. Okay. Now, Kush Bora, I don't envy your job today. But no, there's pain on the screen, right? So we got to respect that. And therefore, the question is, at 22,165 for the Nifty, it seems to be wanting to defend that 22,000 mark, right? Because we started way lower, and from the lows, the Nifty's really bounced. Is this a positive sign, or would you wait for the day to pass?
No, so I'll go back to the opening comments that we made, that if we close above the opening level, which now happens to be 21,750, or just to simply put 22,000 mark, if we close above those levels also, this will be a big win. Right now, we've recovered. But as I said, this could well be the STBT trade closing itself out, and you're seeing that short covering bounce come in, more of that. But yes, if we are able to sustain above the 22,000 mark, that will be a big positive. Banking stocks might actually help the Nifty hold that level or maybe climb a little higher, because the recovery on those has actually been quite healthy, and there's a lot of margin of safety there. So you might want to consider perhaps a long trade on Bank Nifty, not just yet positionally, but yeah, from at least a recovery standpoint. So 22,000 being held on the Nifty is a very strong sign. At the moment, the put base also that you're seeing, pile on at the 22,000 mark, the 22,000 put, about 84 lakh odd contracts, that's also a very healthy sign. So 22,000 being held, we'll take that as a win for the day.
Okay. So I'm just wondering, Parag bhai, on Larsen & Toubro, we haven't spoken about it. It's down over 5% right now. And Neeraj was making the point, and of course, in this kind of market, everything gets beaten. But Neeraj was making the point that the government likely spent a lot more in March. And as a result of which the whole year's target for capex spend is actually likely gone past their target. In that context, and heading into the new year, where you're likely to see a lot more focus on government spend, on domestic-focused entities, what would you do with Larsen & Toubro?
So as I said, that we encashed on that Thursday and Friday when it was holding on, Friday morning, I would say. But definitely, as I said, I was waiting for this kind of fall to happen and to deploy money. So now from here on, there is no need to sell in my view. Of course, Nifty can go down. Yes, the answer is yes, it can go down, because it's till the entire thing becomes certain on the tariff side, which will take some time, because as Trump has said that he wants at least a break-even trade deficit with every country, and which is very difficult to and as China has also retaliated, that is why we saw this correction Dow and our markets also. So I am saying that from here on the prices have become juicier. So I would say that from here on I would take a very cautious deployment approach, not selling approach. There is no point in selling as an institutional investor in this kind of a panic.
So Parag bhai, would you be calling this kind of a correction a beginning to the end of the correction now, taking into consideration the fall that we've seen? And apart from the sectors that we've spoken, Pharma has been the center stage again. Will India be a beneficiary, taking into consideration the CDMO players, the shift that will happen from China?
Definitely, in long run, that is the case. Definitely, in long run, that is the case. But ultimately, you have to also remember that some of the sectors which are impacted the most, like IT and metals, those also can be good opportunities. On the other hand, I would say that, as I said, the clear winners in this kind of, if this continues for long, will be domestic focused FMCG, domestic focused pharma and cement, because these are three domestic sectors. And of course, the second order impact, which is very troublesome, for example, just to tell you, for example, if IT takes a knocking, the hiring takes a knocking, right? And so the indirectly real estate, yes, consumption, everything will take a knocking. I'm not trying to paint a very scary picture over here. I am with investors very much skin into the game. So I would like to assure them that I am in the same boat. But I would say that some of these things, some of these narratives can keep coming.
I want to, while you're at it, let's pull up the realty index just to drive home that point. And the constituents of the realty index, all of them are down, obviously. And this is an index that on Friday had fallen 28% from 52-week low. It's now down close to 5%. Everything from a Soba to a Suntech Realty losing 7% or thereabouts. You have Godrej Properties down about 6%, DLF 6% or so. I take your point, and particularly on some of the Bangalore-based players, if IT goes through a little bit of trouble, then you could have a situation in terms of demand slowing down. But what about your Delhi-based players? What about your Mumbai-based players? It doesn't go out of the window entirely, right? So, from that perspective, considering that we're already down close to 30%, maybe over 30% after today, right, from the 52-week high, where would you go and deploy?
So there will be selective stocks, and we also have one or two real estate stocks in our portfolio. So there will be selective stocks which will not get impacted so much. But I would say that, see, right now, today is a day when there is a capitulation, right? So so today everything you will get, and that is why I am telling your viewers very strongly that, and which I keep saying, that we as institutional fund managers sometimes take a very difficult calls which we have to take to protect the interest of our investors, right? Because protection of capital is most important in such times than return on capital. So I would say that in my view, you have to be very careful and cautiously deploy money and keep some dry powder always.
Okay. Okay, Kush, one last word really. Some of the pharma stocks are also taking it on the chin. Anything out there that stands out? We started talking in the show about pharma. Anything that you want to leave us with?
Torrent Pharma, the stock that we discussed, if you see in a market like this is holding ground. Actually, it's in the green. So why not stick to strength and venture somewhere else? So Torrent Pharma is the one that I will have on my radar from a long perspective.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us.